All right, I'm going to go ahead and get started. I want to be respectful of your time. Thank you so much, everyone, for logging in. I love to do these seminars because I love to educate people on the home buying process. Just a little bit about me. My background has been in HR, recruiting, and about 4 years ago, my parents had been renting for about 30 years here in New Jersey, and I researched it for them, and I'm like, they make a good income. They should be able to qualify. Why are they still renting all of my life? And researched real estate, got into it, helped them buy a house with a realtor, fell in love with the process, and here we are. But one of the biggest things I've committed myself to doing is educating people on being first time that are first-time home buyers on the process of buying a home and that it really is achievable. So hopefully with this presentation today, you get a good understanding of what the process is like. At the end, I'll have an opportunity for you to ask questions. If you want to stay on and have a conversation about the buying process, I'd be happy to do that. Or we can set up a time later on when you're ready as well. So I am a real estate agent with eXp Realty. I run the K White Group. We have a couple of realtors and we cover Burlington, Ocean, Monmouth, Middlesex, and Camden counties. We are also going to be covering Gloucester County come the spring as well. We have some new team members joining. So just so you know, those are the areas that I focus on, but the presentation overall really goes over all of New Jersey. So pretty similar. The only thing that would change would be the market and the way you position your offers and things like that. But the presentation should be relevant for anyone buying anywhere in Jersey. All right, let's go to the next slide. A little bit about what we're going to cover today. So the New Jersey home buying process, we'll go through it step by step. The pre-approval requirements and what to expect when you're talking to the lenders. We'll talk a little bit about the loan programs and how much down payment and all of that you need. We'll talk about cost and budget so you know what to expect financially and you can decide for yourself if it's something you're ready for right now or what you need to do to get ready. Um, we'll talk about the inspection process and the legal steps that really nobody talks about until you're actually in it. We'll talk about the offers, how to strategize your offer depending on where in New Jersey you are. Although a lot of people think that the market has slowed down, New Jersey is still a pretty competitive market in some counties and some cities. So it's really just going to depend where you're buying. Then we're also going to discuss what your next steps look like and what action items you need to start your home buying journey. Then at the end, like I mentioned, I'll be opening it up for questions or anything you would like to talk about regarding the presentation. So I won't go too much into this because I talked briefly and I don't want it to be all about me. But really, so you know, some of my specialties is again the first time home buyers, just because I have a passion of educating people on the process. I'm also an investor. I have multiple properties that I manage. I'm the landlord. So if you want to discuss investment, that's something I can discuss as well. And then also my husband served in the Navy, so we've taken advantage of the VA loan program. So very familiar with that program as well. And let's see. All right. So we're going to start with pretty much the inventory and what New Jersey looks like right now as far as like the market conditions. So right now, especially during the holidays, and just overall, the last couple of years in New Jersey has been very low inventory. So there's a lot of people buying and not enough people selling. So there's low inventory. And what does that mean to you as a buyer? It means you have to work with a realtor that can get creative when they're extending offers. And also focusing on what your nice to haves are versus your must haves, right? Because if you're looking to move sooner, you might have to incline towards one city than another only because of how competitive it is. And that's overall looking at your full structure, your finances, what you're approved for, and what kind of flexibility you have, right? If you have a background or know somebody that can fix things for you, you might be open to looking at properties that are fixer-uppers. And there's less of a demand for those than there are for the ones that are move-in ready, beautiful white kitchen cabinets and everything you can dream of, because the competition will be high. So in a lot of different cities and counties in New Jersey, it's still like that. It's not like it was back in 2021, but there's still competition. And then one of the other things I tell people to look at is property taxes. Because property taxes, although your mortgage doesn't change when you buy a house for 30 years, right? As long as you use that 30-year program mortgage, your mortgage is not going to change. What will change though are your property taxes. So you want to make sure that when you're looking at properties, you're looking also taking into consideration what the taxes are in that city, and making sure that it's not too high to put you over budget, right? Because you don't want to be house poor where you move in, you're tight on the budget after you have your mortgage, and then the next year Uncle Sam decides that they're gonna up the taxes in that city, and there goes your mortgage payment. It goes up by 100 or 200 bucks, which I have seen happen within the last couple of years. So property taxes are important when you look at the housing market and when you're considering what town you're purchasing in. And then again, the market competition. So we're going actually into our busy season. The spring and the summer are the busiest. Spring is busy because it starts warming up. People are more comfortable moving because there's no snow and the weather is nicer, yard sales and all of that. So the spring is really the busiest season. Summertime is the second busiest in the beginning of the summer, I'd like to say, because kids are out of school. People are more comfortable moving, right? Because their kids are not in school. There's a little bit less going on in the summer. I want to say towards the end of the summer, it kind of starts to slow down just a little bit because it's August is actually one of the biggest vacation times for people, and since school starts in September, everybody wants to get that last vacation in come August, so it kind of slows down a little bit at the end of summer, and then it picks right back up in the fall, right before the holidays. So there are fewer buyers in the fall. Um, so you have a little bit of less competition. So spring and summer, you have more competition. Fall, it starts to slow down. And then come winter, you get the best deals because people don't really want to move during the holidays, right? We just went through the holidays. I had a listing and my client was like, "Can we pause the listing? I don't want anybody coming to my house during the holidays," right? So um, there's the best deals are really in the winter. And also like right now, right? January, February, it's cold, it's snowy. People don't want to go out. People want to stay in. The best deals are really in the winter. So more competition spring and summer, fall and winter, or you might get some deals depending on the city and all of that. So the biggest thing is making sure that you're financially prepared for the season that you're going into, right? It doesn't mean you can't buy in the spring and summer. I've had plenty of buyers that buy, at all the months. It just means that we have to strategize what we're doing for the in the market that we're in the market that you're shopping for, and kind of tweak and customize how we present the offer. Okay. So a little bit about the buying process and what it looks like step by step, so you can understand each phase there and you can avoid surprises because I remember when I bought my first home years ago, I, we got into it and my offer was approved and they're like, "Okay, you need to do this and you need to do that." And I'm like, "What? I was just buying a house. I didn't know I needed to do all that." And plus there's additional costs associated with it. So that was a lot. So the step by step, I'll go over just on a high level. The first thing you want to do is really have a buyer consultation. So what is that? Is having a conversation with the realtor that you choose and really talking about your goals, your timeline. The budget you might not know until you talk to a lender, but you can tell them a little bit about what you're comfortable paying on a monthly basis. And then after you talk to the lender, that will solidify what you can financially afford. And then creating a personalized home search strategy, right? I talked to somebody earlier today. They told me they're not looking to buy until like summer, midsummer, end of summer. So I told them, I went through the process with them, had that conversation, but they're not ready right now. So I let them know, let's touch base again in a couple of months, because if you're looking to close during this time, this is where you need to be. So having that conversation with a realtor is important, to have that understanding and kind of set up your timeline for yourself and seeing if those goals are realistic. The next step would be the pre-approval process. And with that, you can use any lender. Of course, that's the choice. It's going to be your choice. You're the one that's going to be paying that bill. So as a buyer, you get to choose the financial institution that you use. I've heard stories that people say you have to use this, you have to use that if you're buying my house. It's not true. It's your legal right. You can choose who you're going to be, lending, getting that money lent from. So, talking to the banks that you already bank with now is a good idea. Having that relationship with the banks already might set you up for a program that other people might not qualify for. If you work with me, I have a list of lenders, so I'll send you a list of lenders that you can also call. I always say shop around, because you want to make sure, A, you get along with the person that's approving you. Talking money can get very, very sensitive. And if you're having conversations consistently on a daily basis, especially leading up to your closing with somebody you don't like, their personality just doesn't click with yours, is going to be difficult. So I always say interview your lenders, interview your realtors. And then with your lender, you're also shopping for the best rate and the best closing costs. They're all similar, but some of them can offer you maybe a little bit of a lower rate because they have a program, closing cost assistance if they have some kind of program that their institution offers. So there's different things, and like I said, I always say shop around for a lender, try to get yourself the best deal. Yeah, and then having that solidified pre-approval before you start looking at homes puts you in a better position for when you're ready to make an offer as well. And then the home search process, right? You've met with your realtor, you've decided who your lender is going to be, and then the home search starts. This can get exciting and sometimes a little overwhelming because you're looking at properties. You are creating your wish list of what you want in a house or a condo, whatever it is that you're looking for, having your must-haves and your nice-to-have list, and then you get to start touring the properties. Um, so, having those showings on the weekends, in the evenings, having that availability to go see homes as soon as possible is important, because again, the market is still a hot market, and sometimes the house will sit on the market for 30 days, but sometimes it's 4 days and they're already calling for highest and best, and the house is no longer available. So, just having a little bit of flexibility when you're touring the homes and keeping an open mind. I had somebody that I showed a property to. The property needed updating, and I wasn't sure if they were going to go with it because it needed a lot of cosmetic work. And they saw the vision and they were like, "We love this house. We're going to buy it." They painted it and they sent me pictures, and I just couldn't believe it was the same house. So I always say go with an open mind, especially if you like to do DIY things, can put you in a position where you have more opportunities available and things to compare for yourself. So once you find a house that you love, is the offer and negotiation stage. At this point, your realtor, your right hand is really your realtor, right? Making sure that they understand the market. You want to get the best deal possible, but you also want to go in with a strong offer. I always tell my clients, do you love the home or do you just like the home? Because we position the offer differently if you love it versus if you just like it, right? If you love it and you can't live without it, we're going to go in hot, and we want to make sure that your offer is accepted. Looking at the market, understanding how long it's been on the market, what homes are going for in that area, and just really trying to strategize the best offer possible. Now, if you just like the home and you wouldn't be hurt if somebody else purchased it, I would say let's try to get you the best deal possible. Maybe we can add in some incentives and things like that. So, do you love it or do you like it? And then strategizing from there what that offer looks like during that time. Then, if your offer is accepted, the next step would really be it's not in this presentation, but in New Jersey is a buyer attorney review period. So you have an opportunity to change your mind for any reason within the first 3 days in the state of New Jersey and cancel that contract. The seller can also do the same, but as a buyer, you can change your mind. You can have the attorney review the contracts, make sure that those changes that need to be made are made and that everybody agrees, and you have that period where you can change your mind. So that's the attorney review period. Once the attorney review period is concluded, we go into inspections. So the inspections, you hire a professional inspector, not not your best friend that's a carpenter. I say focus on those that are experts in the field. They're licensed, and they'll give you a professional report of what everything has, what the property has, what you need to keep an eye on, and what the red flags are. This period can be a little overwhelming because sometimes the inspectors, they want to go above and beyond showing you what the property has. So I always say if you're concerned about it after what the inspectors say, get a second opinion, whether it's like termites or something structural with the property, get a structural engineer, get the pest control company out there to get that second opinion. And then at that point during the inspection period, you do have an opportunity to renegotiate if needed, right? So if there's something major with the house, you have the opportunity to renegotiate that purchase price or help them ask them, hey, can you fix this before we close, right? So that there's negotiating throughout the process. The initial negotiating when you're submitting the offer, you negotiate again during inspections. And then the next opportunity you get to inspect is during the appraisal period. So the appraisal period is when the bank has an appraiser. You don't get to choose this. The bank chooses who the appraiser is going to be. What's happening is the bank is confirming that the house is worth what they're letting you borrow, right? So if God forbid something happens and you can't pay for it, they want to make sure that they're not lending you more than what the house is worth. So they look at the different values of properties that have sold in the area, and they use those numbers and the what the property looked like, right? Because if we're looking at one property and one is fully renovated, the other one is the same exact size, the same beds and same baths, but it needs work. This one's obviously going to be worth more if it's fully renovated. So they look at all of those things and then they give us an estimate of what they believe the house is worth. If the house comes under value, so say you offer $300,000 for a house, the appraiser comes back and says, "Hey, this house is only worth 290." That's your last opportunity to renegotiate the terms. It could go many different ways. It could be they say, okay, we'll drop the price to what the appraiser said. We'll sell it to you for that. They can say, no, we still want full price. And then at that point, you can walk away from the contract. Or they can say, hey, we'll meet you in the middle. You pay five, we pay five. And then they'll drop $5,000 if there's a $10,000 gap. So those are all things that are expenses to you before you close. So the inspection has a cost, and that's the buyer's responsibility. The appraisal has a cost, and that's also the buyer's responsibility. And you'll see those costs before closing. So those are some things to keep in mind of expenses that you'll have during the buying process. And then finally, the last two would be underwriting. So once the inspection period is complete, once the appraisal is back and the bank has that, then the bank will underwrite the loan. So they are going to review your finances again, right? So they did it initially in the pre-approval period. They checked your credit, but then they do it again during the underwriting period, just a couple of days before closing. So they'll pull your credit again. They're going to ask you for pay stubs again. They're going to want for recent bank statements again. And then after that, you'll get the clear to close should nothing change. So you want to make sure that when you get your pre-approval, from the moment you get your pre-approval to the moment you close, right? Until even after a couple of days after closing, I would say no big expenses. Don't go buy a car, don't go buy furniture, don't go buy a fridge. Wait until you're fully done with closing and then go ahead and make those bigger expenses because anything can throw off your approval. And unfortunately, I have seen it where people make a big purchase and it's 2 days before closing, and the bank calls and they say they no longer qualify. They just bought a car and their payment is $200 more than it was. So limit yourself on expenses until you close on the loan, especially until the underwriting period is over. And then the fun day is closing. On closing, you do a final walkthrough of the property. So before you go to closing to sign all of the documents, you do a final walkthrough, making sure that the property it looks the same as it did when you went to go see it and during the inspection, and that nothing major changed. And then you go to your title or attorney, depending on where you coordinate, to sign the documents. The documents are like this thick. There's tons to sign, so just make sure you bring your good pen for closing because there are a lot of documents to sign, and that is all from the title company and from the lender. So I saw a question pop in here. Let me just see. Is there a price that averages for inspection to pay? So it depends on who you use. Um, I always say, and it depends on what comes up, right? Because if you just have a simple inspection, it could be anywhere from $600 to $800, depending on the company that you use. But if the inspector says, hey, we found this structural concern, you have that $800 that you paid that inspector, plus then you want to hire a structural engineer to give you that second opinion, and they might charge anywhere from $300 to $600. So I always say anywhere from just to be safe, from 1,000 to 1,500. Worst case scenario, just having that in your pocket in case you do need to hire additional professionals for a second opinion on the inspection. The standard inspection is really $600 to $800 on a single family home. If you get into like multifamilies, obviously it's more because they're inspecting two units, but yeah, just about that. I always say have like $1,000 to $1,500 set aside for inspections. The appraisal is anywhere from 5 to 600, depending on who the bank uses. So you're going to need like $2,000. I would say keep that to the side for inspections and appraisal. Great question. That was one of the expenses that I was very surprised during my closing back in the day. So, all right. So we're going to talk a little bit about loan types and what that pre-approval process looks like that I had mentioned. So in the pre-approval process, you want to make sure that the lender is giving you an accurate pre-approval. Sometimes some lenders, I won't say who, but some lenders will just ask you a couple questions and say, hey, you qualify for $500,000 without really looking at the big picture for you, right? So you want to make sure that you go through underwriting, preliminary underwriting. So the lender should be asking you for things like your most recent pay stubs, usually the last 1 to 2 months. They're going to ask you for the W-2 forms, your last 2 years. If you are self-employed or you have a job that pays you cash, they'll ask you for the last 2 years of your tax return, especially, and bank statements, especially for positions that pay cash, like barbers and hairdressers and things like that. They might have that additional income, so they can use your W-2 forms, your tax returns, and your bank statements to give you an accurate pre-approval, and one that obviously that you're going to be comfortable with. One of the other things that they look at is they're going to be looking at your credit score, your income stability, your debt to income ratio. They'll make a calculation and make sure that you meet their requirements. Some banks are more conservative than others. Some have more flexibility because they have different programs. And a lot of them are going to ask you for at least 2 years of work history. So you will need those, the last 2 years of tax returns and W-2 forms and all of that. So they'll be verifying all of that. The different types of loan options that there are. There's the FHA loan. And that one, if you have a lower credit score or not too much credit, you'd be able to qualify for something like an FHA loan. With that, you need about 3.5% down. I know a lot of times people think the only way you can get a home is if you have 20% down. That's not true. There are programs where you can do 3.5% down, like this FHA loan. There is an additional monthly cost, but the program is funded is guaranteed by a government program. So what that means is there's an additional insurance that you're going to have to pay because there's a little bit more of a risk because you have a lower credit score. So that mortgage insurance is added to your mortgage payment. With the conventional loan, if you pay 20% down, you don't have to pay that additional mortgage insurance, which could save you, depending on what the house is worth, a couple dollars or a couple $100 a month. So it really depends. But again, with the FHA loan, if you have a lower or less credit history, you'd qualify for that FHA loan. The conventional loan requires 3 to 20% down. You get better interest rates because it's required to have a stronger credit score to qualify for a conventional, and you also have to have less debt. So overall, it just has to be stronger credit, and you can do anywhere from 3 to 20% down. You'll pay mortgage insurance if you do less than 20% down. But the nice thing about the conventional loan is that if you do 15% down, you're only paying the mortgage insurance based on that difference, right? On that 5%, because banks like to have that 80% equity. I'm sorry, 20% equity on the home where they're just lending you for 80% of what the home is worth in case something happens. They still get to make their money. So if you do that 20% down, you don't have to pay that additional mortgage insurance. But anything less than that, you do. But once you hit equity, so if you make renovations on the home, the market shifts and the home value goes up, you can call the bank and say, hey, I think my home value went up. Can you drop my mortgage insurance? And they'll just take it off of your loan. Versus with the FHA loan, they won't take it off. You have to refinance the loan, pay the closing costs again. Um, and that would be the only way to get out of that mortgage insurance usually. So that's the difference between the FHA and the conventional. And then you have the VA loans for active military and veterans. This one's great because there's no mortgage insurance. You do 0% down, and they usually get a better rate similar to the FHA loan. They have a lower interest rate as well. So this one's a great program for our veterans and active military, well deserved for all of their hard work. And then the last one is the USDA loan. This is also 0% down, but it has to be approved by the bank in a rural zone. So if it's not in an area that the bank approves for 0% down, then it wouldn't qualify. There's also income limits, so there's restrictions on a certain threshold. If you make more than X, you probably wouldn't qualify for a USDA loan. But this is great if you're looking in suburban areas. And also with the income, if you have a lower income, then you don't have to do anything down. So that's really great too. It gives an opportunity to purchase in those areas as well. All right. So all this talk, and it's like, how much do I need? So, I want to talk a little bit about down payment and closing costs, but also just keep in mind that this is just an example. It's not exactly this amount. The best conversation you can have is with your lender, especially when you already have a property in mind that you're about to make an offer to. Then they can give you a more accurate number. But this is just so you can get a ballpark idea of how much money you're going to need for the purchase of the property, right? So the down payment options, I already mentioned, what percentage down depending on the loan type. So obviously you'll need that down payment. The larger the down payment, the lower your monthly payment is going to be. Usually you get better interest rates as well, but you have that wiggle room from anywhere from 0% to 20% down, depending on the loan program that you qualify for. So that's one cost that you'll have would be the down payment. And then the next one is the closing costs, right? So this is attorney fees. This is property tax adjustments, right? Taxes in New Jersey are paid on a quarterly basis. So if you buy in the middle of a quarter, they make those adjustments and they debit or credit your statement at closing, depending on how much you're going to owe, right? You're going to owe the seller because the seller has already paid that quarter. So they'll have those adjustments. There's going to be the lender fees and their origination charges for their applications. There's title insurance. So title insurance is the search that I say you have to do a title search, right? Even if if you're paying cash, it's a quick and easy transfer because you never want Uncle Sam to come and say, "Hey, that's my great uncle's house that you just bought. You owe me $1 million," and then they run the township documents, and you realize that Uncle Sam does actually own the house, and they shouldn't have sold it to you in the first place. If you have title insurance and title does the search, the insurance covers that. And you would get the money that you paid for the house back. But also, it saves you a headache, right? Before you even close on the property, they do those municipal searches to make sure that nobody else owns a house, that nobody else has a right to that house, to make sure that that property that you're buying is going to be 100% yours and you don't have to worry about in the future. So those fees are included in your closing costs, so title insurance and the searches that they do. The home inspection fees are not, this is incorrect. They're not in the closing. Those are before, but I put it here because I want you to keep in mind that's an additional expense that you're going to have during the buying process. But the closing costs at the closing table, this is not included. And then the last thing is the recording and, if applicable, transfer tax. Usually the seller pays the transfer tax, but there have been situations where the seller will require the buyer to pay those taxes. So I added that as well. So I say you could expect anywhere from 3 to 5% of the purchase price in closing costs. So if we use that as an example, a property that costs $400,000, the expected closing cost would be anywhere from $12,000 to $20,000. And if it's an FHA loan at 3.5% down, that's $14,000. So on the high end, worst case scenario, for a $400,000 house, you need about $34,000 if we're looking at the high end of the closing costs, right? I always like to overestimate, right? And just say better to have more, and then at closing you get to keep your money versus not being able to close because you're short $1,000 or $2,000. So yeah, this is just an estimate again on a $400,000 home using an FHA down payment, um, which is the 3.5%. There are different programs. There's grants that you may or may not qualify for. Again, as I mentioned before, the lender would, you can have that conversation with the lender. They would look at your big picture and see what you'd qualify for, but always ask, are there any down payment assistance programs that I could qualify for? And they can take a look to see what options you might have. I know right now the state has a grant that can help with up to $22,000 towards closing, but again, you have to qualify for it. They look at your credit score, they look at your income. It also has an income threshold as well. So you can keep that in the back of your mind of, if you do have the $25,000 you need or $35,000 you need saved up, great. You can still apply for the grant. And if you are approved, it's less money out of pocket. The caveat with the grants is they do require you to own the property for at least 5 years. A lot of times, some of them are even longer, 7, 10 years. And if you do not and you sell it before or move out and rent it out before, you're required to pay that down payment assistance back. So just a couple things to keep in mind, thinking about down payment and closing costs. All right. I'll go through this again here, which is home inspections. The home inspector really goes through everything. They look at the structure, they look at the HVAC system, they check the windows, they look at the floors, They will give you a report of everything. They also do the initial termite inspection, typically, and they'll look for termites and let you know, hey, there's some. This is an example of when you would need a second opinion. They'll say there's some evidence of possible termite in the basement or in this crawl space. We recommend you hire, another third party to re-inspect that, and you would have just to throw it out there, is like Terminex come out and they'll recheck the property and tell you if there's active termites or if it's something that's from the past and it's already been remediated. So, those are some things. Another one is radon testing in New Jersey. A lot of basements and crawl spaces in certain towns um, can have radon. Radon is an odorless. It's an odorless. It's not a chemical. It's a natural, like a natural. It's just natural. So radon, it's natural, but it can cause lung cancer. So as you don't want it confined in one space, and it does get confined in crawl spaces and basements. So I always recommend if you have an older house to have that radon tested, and then that they'll check for the levels that are allowed by the New Jersey Environmental Department, and they'll say this is good, or they'll say this is way too high. They're going to need to install a system for you. And then that would be negotiated at closing as well. And then something else that's really common in New Jersey is the underground oil tanks. So it's very common, especially in older houses, to do a scan and a sweep of the property. Back in the day, there used to be oil tanks, and they were underground, or they were not underground. And instead of getting rid of them and disposing them properly, back in the day, they would dig a hole and put it in the yard. So when you're purchasing a house, you want to make sure that the inspection company does that underground oil tank sweep, just to make sure that there's nothing underground that needs to be taken care of. It can be very expensive to remediate an oil tank, especially if there's leaks and things like that, because then the state and their environmental department gets involved and it can be very pricey. So, that's really what the inspection period looks like. During the attorney review period, you have the opportunity to work with your attorney to review and modify the contract. They're going to be obviously protecting your interests and your rights. And then if something comes up within that 3-day attorney review period, you can cancel the contract for any reason. Again, that goes for both sides, the buyer and the seller. But you have that wiggle room, you get cold feet or you find something out that you don't want the property, you have that 3-day period to get out of it. After the attorney review period, you are binded by that contract. So if you decide to cancel, the seller will have a right to sue, and request any fees that they have inquired, or any losses that they've had for accepting your offer. So as long as you have that attorney, you cancel before the attorney review period, or you cancel within the contract terms, then you're good on that. You won't lose any money. And then property appraisal, I talked about that earlier. You have the opportunity to renegotiate. If you love the house and it came in at 295, but you already offered 300 and you don't care, you still want to pay that extra 5,000 because you really, really, really want it. You do have an opportunity to bring extra money to closing, and increase your down payment to still be able to purchase the property. So it's not like the bank says, no, they're just going to require you to have more money out of pocket. And if those terms can't be met, that's another opportunity for you to be able to walk away if the appraisal doesn't come in where it needs to come in. Okay, so I believe this is the last slide, and then I'll open it up for questions. One of the things you're going to need upfront as well, an additional expense, is the earnest money deposit. It's anywhere from 1,000 to 5,000. I've even seen it be $10,000. So that is an initial deposit. Once your attorney review period is over, what is going to be due is called the earnest money deposit. It just shows that you're committed, you're serious, and the larger the deposit, the stronger your offer is, especially in a very competitive market. And again, like I said before, if you cancel the contract, where you're outside of your terms, you can lose that earnest money deposit. So you want to make sure that before the attorney review period, that's the house that you want. And making sure that with your attorney, the terms of the contract are okay, right? So if, for example, something comes up in the inspection and it's something major, like a big hole in the roof that we missed, right? Or something like that comes up and the seller is not willing to fix it or give you a credit for it, you can cancel the contract. And as long as that was written correctly in your contract, you will get that earnest money deposit back. It's when you cancel the contract and you haven't kept your word based on what the contract says that you can you lose that. But a higher earnest money deposit makes a stronger offer. And then, like I mentioned before, a strong offer also is this is why it matters who your lender is, because if the lender is a reputable lender, but also can show that they've already pre-qualified you and not just a verbal pre-qualification, but you went through underwriting, that makes it a stronger offer. Listing agents will call your lender from your pre-approval letter to make sure that everything's good and in good standing and that they feel strong about you closing. So you want to make sure it's somebody that is a lender that's reputable. And then the inspection terms, being flexible with your inspection timeline is good, but also making requests that are not going to kill the deal if you really want the house. You can't go in there and say, hey, I really don't like this tile. Let's change the tile before we move in and expect the seller to do that, right? Because that's a preference, that's cosmetic. You want to make sure you're reasonable with your inspection terms. And you're comfortable going in with an offer that you don't feel like you have to renegotiate during the inspection period unless something major comes up, right? And then having flexibility with your closing, being accommodating to sellers is huge, especially if they're looking to relocate and they haven't found something, or they need to leave by a certain date because they don't close on their next house until another date. Having that flexibility will make a strong offer for those sellers that it matters to, right? Or being able to close quicker. I had a deal in December that it was multiple offer situation. We did offer slightly over asking, but our offer was very similar to everybody else's offer. And the only reason they went with us was because our lender said that they can close in 21 days. So we got the offer because we could close quick. They were excited about us being able to close quick, and we had the stronger offer, although the numbers were all the same. So that's part of that strategy period and negotiation that the realtor will go through with you and have that conversation before the offer is submitted. And then the last thing, like I mentioned before, understanding the taxes and fees because you don't want to bite more than you can chew. So making sure that you know what those property taxes look like, and if it's a property that has those homeowner association fees. Sometimes they do require you to pay 3, 4 months in advance before you close. So that's going to affect your monthly budget. So negotiating to the point where you have a strong offer, but also negotiating to make sure it makes sense with your finances. And all right, so next steps and the action plan for you all. So if you're ready to start the home buying process at this time, the next step would be to schedule your buyer consultation. I'd be happy to do that with you and have that conversation about what your goals look like. We can come up with a personalized strategy. And if you're ready, I would connect you with a lender to get you pre-approved and that so that you can have a better understanding of your budget and what that would look like on a monthly for you with the mortgage. After that, we would create a list of your needs versus wants once you have your qualification letter. And that's having your nice to haves versus your must haves. And then I would create up those alerts for you, those property alerts for you, so that as soon as those houses hit the market, you get them in your inbox right away. You can see the property, and especially like I mentioned before, if it's in an area that is going to move quickly and there's highest and best and 5 other offers, we're moving fast. Like we see it today, you want to go see it tomorrow. If I can't show it to you, I can have somebody on my team show it to you, but just to get you out there so you don't miss out on any properties. We start touring the homes, and then obviously once you find the one that you love, getting into those next steps that we talked about today. That was a lot. And I've been talking for 15 minutes. So if anybody has any questions, you can unmute, you can throw it in the chat. If I don't know the answer, I will find it for you. Any questions, anybody? Okay, I see something in the chat. Let's see. So, do you have any advice for choosing a realtor? Yes, I always say, similar to what I said about the lender, um, interview your realtor, whoever you're going to be looking to use, right? Have a conversation with them. Even if it's somebody you know, you want to make sure that they understand the market, they understand uh, how to negotiate on your behalf. More importantly, how you two click, right? You have, again, this is somebody you're going to be talking to a lot, especially during that closing period from that buying process, right? So you want to make sure you get along. You want to make sure that you like their personality. Um, yeah, and just ask questions. I always say ask questions, interview them, and ask for reviews, right? Look at testimonials that they have maybe on Zillow or Google, things like that. So that's what I always say. Great question. And then show you the first part of the slide. Yes. Hold on, let's see. In the beginning, oh, I think you're muted. I'm sorry. Um, I can send the slide to you, Talia. Would that help?
Yeah, sorry, I was muted.
Oh,
Yeah,
that's
the
okay. No worries.
beginning of the slide, yeah, like I missed the first part. Like I was taking screenshots of that.
Oh, yeah, no worries. I can share the slide with you. That's fine. I'll email it over.
Okay, thank you.
You're welcome.
Hello, Happy New Year.
Happy New Year. All right. Anyone else have any questions? We have a couple more minutes here. I'm happy to stay on, or again, we can schedule a call as well. Everybody should have gotten an email from me, so you should have my email too. And I can put my contact information up here as well,
Thank you.
right here. Awesome. Well, if nobody else has any more questions, I really appreciate you hopping on and staying on this till the end. I know that was a lot of information. But again, if you have any questions or you'd like to connect, feel free to text me or email me, and I'd be happy to set up a call.
Yes, thank you so much. It was really, really good, and it's nice to have information like that to get
Awesome.
you an insight of outlook of things.
Yes, I always say it's better to be prepared. I think the first time I had my conversation with my realtor back then, it took me a year to get ready. So this is good information to have,
Yeah.
whether you're ready now or you're going to be ready within the next couple of months or even a year like me. So yeah, I'm glad you found it informative and helpful. That's what
Yes,
I'm aiming
much
for.
so. Very much so. Thank you for your time and dedication and attention.
Of course. Thank you so much for hopping on. I appreciate you.
Really appreciate it. And you need a rest now.
All right, everyone. Well, thank you so much. Have a great night.
Have a great night, you too. Thank
All
you.
right, bye,
Bye.
everyone. Bye.